All right, what's up guys? In this video we're going to take a look at trend days, which you can see here on the left side, versus chop days and slow days, which you can see here on the right side. And what I'm going to show you is that it doesn't matter if it's a trend day or a chop day. I'm going to show you how you can potentially make trading profits on any kind of trading day, trend or chop, and I'm going to show you how to do it without any indicators whatsoever. So let's go ahead and fire this up. All right, what's up guys? It's Mark here at DynoTrading. Hope you're having a great start to your trading week. You know, we're in the second half of 2019. We are in the second half of July, and I have a feeling that July is going to be a pretty volatile month for the market, especially since we got Fed Day happening exactly on July 31st. And you can bet your ass that all the smart money, all the professional traders, and all the institutions are trying to position themselves accordingly for a big move that may be happening up or down. You have no idea, right? You got to just trade what's in front of you, not what you wish was in front of you. And you know, it's going to be great. But today is Monday. It was kind of a slow day in the market. You know, we had a huge week last week. You know, the Dow was up 500 points. The NASDAQ was up 300 points. I mean, it was like just an insane week last week. So we're about due for some consolidation and some chopping around, and that's what we had today. So what I thought I was going to do today was do something a little bit different for you guys, and that's talk about and show you exactly a clear contrast between trend days versus chop days and what you do about it, and of course, how do you stay on the right side of the trend, right? So that's what we're going to look at in today's video. So let's get these charts loaded on the screen here. Today's July 15th. You can kind of see that here in the x-axis, and today it's a Monday, and you can kind of see, right? What's obvious to you is the clear difference between Friday's price action, which was just a massive day in the market, and today, which is kind of a quieter day in the market. And I'm recording this video a little bit after lunch, so you can kind of see the moves that we had in the morning session. But you know, what I want to talk to you about is if we give this a label here, right? This is a trend day, and this one, we give this a label that says this is a slow day. Well, what does that actually mean, right? I get a lot of questions from you guys on how to properly identify a trend day versus a slow day. And, you know, listen, guys, this is not a crystal ball, right? There's nobody on earth, not even Goldman Sachs has a crystal ball that can tell you, hey, you should only trade on Monday and Tuesday, and then Wednesday, Thursday, Friday, stay out. That's not possible, right? You gotta come prepared every single fucking day to your job as a trader and be prepared as if it's going to be a trend day, right? So let's talk about the definitions. Well, a trend day is obviously where the low of the market and the high of the market was huge, right? And you can see here we had almost a 300-point range on the Dow futures on Friday. And today, if we mark off the low and the high, this was only about a 140-point range in the market. So this was about half, right? 50% of the range that we had on Friday. So it's obvious that it's a slow day, but let me clean this up here before we get into this. So it's obvious that today was a slow day, but can you guys see something here? Right? I really want you to stare at these charts here. Okay, let me do my best to zoom in here. Okay? So trend day on the left, slow day on the right. Okay, so far so good. But can you kind of see that the signals are still fucking beautiful? Right? Here's a long signal right here on the trend day. Okay, no problem. We draw our high, we draw our low, and we want to wait for price to retrace into that zone. It does. There's our retracement. And just like that, we grab a quick 90 points on the Dow. Okay, fine. How about on the slow day? Well, let's take a look at this short signal. Okay, great. We'll draw our high, we'll draw our low. Okay? Can you tell me if you see any areas where price came in and gave you a nice short retracement? Right? Beautiful retracement happened right there. And just like that, you had another 90 points on the Dow futures, right? That's just under $1,000 trading 2 contracts, all right? That's a lot. That's a really nice trade, okay? So can you guys see what I'm getting at here? Do you know what I'm saying? Whether you trade a trend day like this, okay, on the left, or you trade a slow day on the right, it doesn't really matter, right? Because as long as you're mastering price action, as long as you understand where the buying zones and the selling zones are, as long as you understand how the smart money is trading, it doesn't make a difference for me, and it shouldn't make a difference for you guys, right? I tell people all the time, good trading opportunities happen all the time, 5 days a week, 24 hours a day. That's the beauty about trading futures and Forex, right? There's always trades to be had. Don't let anybody tell you otherwise. But you can also kind of see that as long as you follow the same game plan every single day, which is wait for the signal, draw your zone, wait for the signal, draw your zone. If you do your job as a trader, you're still going to be profitable. You're still going to have fantastic trades. You see what I'm saying? So let's take a look at another type of chart, what I call the T-bar chart. You guys have seen my T-bar charts on display before. Here's a really nice T-bar chart that I've got loaded up with kind of a higher speed setting than normal. I'm using a speed setting of 80, right? Well, the reason I'm doing that is to show you an illustration of how when you trade price action only and you don't look at any indicators, you don't look at any bullshit, you don't look at any stupid candlestick charts and this, that, and the other, and MACD and stochastics, none of that, all right? If you have a simple price-based chart, I'm going to show you how it keeps you honest, okay? So as an example, say your trading bias today on this particular instrument was short, right? So you would do what you normally do, which is draw your pivot points right there, and you would draw your trend line connecting these 2 pivot points just like that. And you would have a nice short signal here when price breaks that trend line, and you place your stop over here, okay? So this is where the stop would go, right over there. Simple. You've seen that before, nothing new here. But what I mean about how price action will always keep you honest and how you stay on the right side of the trend is, check this out, okay? So say you want it to be stupid and try to go long, right? By using trend lines again. So say you tried to connect this pivot point with this one, right? This one right here. And then you tried to connect this pivot point with this one. And then this pivot point with this one. Well, guess what? Not a single one of those trend lines broke to the upside. None of them. Didn't do it here, didn't do it here, didn't do it here, right? So let me just quickly delete those. So can you see how this T-bars chart was telling you, hey boss, we're in a downtrend right now. We're not going to give you any long signals at all. Even though you want to be stupid and try to buy this market, don't fucking do it. You get what I'm saying? So the T-bar chart and really any type of price action chart is always going to keep you honest. In this particular trading setup for today, July 15th, you were either short this market or you were out. By the way, we're looking at the GBP CAD, all right, for you Forex traders, okay? And for you futures traders who are mildly curious about Forex, right? And same thing on our DynoBars chart, right? Our master chart on trading the Dow futures today. These signals here, right? The ability to forecast a trend and the ability to always take trades on the right side of the trend. Guys, that's the fucking holy grail of trading, right? And you do it without any indicators whatsoever. No MACD, no stochastics, no moving average lines, no, nothing. This is exactly how professional traders do it. Day in, day out, week after week, month after month, all year round. You get what I'm saying? I mean, guys, you got to be passionate about this. You got to be hungry to succeed in the market. When you win at trading, somebody else loses, right? Usually a retail trader or a newbie type trader, right? And that's the reality about trading. This is not a game for Mr. Nice Guy or Nice Girl, right? Trading is kill or be killed. You're sending your money out to a war, and you're hoping your money comes back with more money, more soldiers, right? That's what I mean about getting excited, getting passionate, and really jumping into this and treating it like a business, like a professional, like anything else when it comes to speculating in the market, right? You gotta be disciplined. The trend, being on the right side of the trend, being able to forecast this long here, this huge move up and then this huge move down, that ability is how you're going to find long-term success as a day trader, and it's how you're going to be able to do this for the next 20 years, 30 years, 40 years of your life. All right? Anyway, guys, I hope you can kind of see that trend days versus chop days, it really makes no difference. As a professional trader, you come prepared to work every fucking day and you just trade. You trade what's in front of you, not what you wish was in front of you. You trade price action, not indicators. Okay? And I'm happy to be a resource for you guys if any of you guys want to learn more. So thanks for watching this video, guys, and as always, best trading wishes.